Having traded real estate loan portfolios in excess of $4 billion, Darin Batchelder is currently invested in 3,944 units as a limited partner and over 486 units as a key principal. After learning about the positive impact investing in multifamily real estate syndications has had on the lives of others, he quickly began to seek out active syndicators and invest with them. In this episode, Darin shares with us how he went about identifying syndicators he wanted to invest with, his thought process when selecting some of his earlier deals, and his reasoning behind believing that having the right personnel at the property level and partners are critical if you want to succeed in this business. All right. Well, welcome back to another episode. Today we have Darin joining us here from Texas. Darin, welcome to the show.
Thanks for having me on, Dion.
I appreciate you coming on. Yeah, so
absolutely. Looking forward to it.
Yeah, me too. Darin, why don't we just go ahead and tell our listeners something about your background, a bit about it, and how you transitioned into real estate?
Sure. So I've had a couple of career changes. So I started out as a CPA with Price Waterhouse. I then went to work with PepsiCo within their international audit group, then transitioned into sales, working for a few different software companies. And then after the dot-com bubble burst, I transitioned into institutional trading. So I was working for a Dutch bank named ABN AMRO in their Boca Raton office, and we were on basically working for their mortgage capital markets trading desk, and they were a top 5 jumbo residential originator at that point. And we were reselling the loan origination to other banks in larger loan portfolios. While I was there, we purchased a bank, LaSalle Commercial Bank out of Chicago, which had a large multifamily portfolio. And so we started to trade large multifamily portfolios as well. I left the bank in 2006, and then in 2007 started my own company, focused again in that niche, trading clean credit quality performing loans, bank to bank, and focused on residential, multifamily, and commercial real estate loans. I still have that business, but was always interested in getting involved on the real estate side. And a couple of years ago, my business was running efficiently, and it afforded me some extra free time. So I started to look into how can I get involved in purchasing real estate. I did not want to do single family fix and flips. So I wanted to do larger scale multifamily deals. And so I went looking for a way to do that. And I found a mentorship group here in Dallas, and by the name of Brad Sumrock. I joined that group. And from there, I met a ton of great people, and that helped me along the way.
So you mentioned just now as well that you started, it's like a notes trading business.
Correct. Don't deal with the end consumer at all. It's just bank to bank. So one bank may want to sell loans for one reason or another. In the last financial crisis back in 2008, 2011, there were a lot of banks that were looking to deleverage their balance sheet. And so we worked with them to help them sell large portfolios of loans. And our niche was really, we can get you par or premiums on those portfolios rather than taking large losses, but you're going to have to sell your better loans, so not your troubled debt. That we really focus in on that. So, yeah. So I knew a lot about the multifamily asset class before I got involved on the real estate side, but I hadn't purchased a large apartment complex. So there's different things that are involved with actually purchasing a community versus trading a portfolio of loans.
Mm-hmm. So can you tell us a little bit about that transition into how you began buying, these actual assets, multifamily assets?
Sure. So I joined this group December of 2017. In January, I then started to set up meetings with people that were actual syndicators within the group, and pick their brain in terms of, how'd you go about it? Has it been successful? And it was one after the other. It was like, change my life, change my life, change my life. And, just the wealth creation from being part of it. So I was excited. And so I started first, I sold a bunch of investments out of the stock market and started to transition that capital into passive deals. So I started buying into other people's deals as a passive investor. I think my first deal was January or February of 2018, and I invested in 7 deals that year as a passive. As I was doing that, I was also, talking to and building relationships with other syndicators and also other passive investors that may be interested in, investing in a deal if I was to find a deal. And then I started to go through the steps to actually get my first deal. And it took me about 9 months from the time I joined until I was awarded my first deal as a lead syndicator. And then it took us a few months to close that deal. So we closed it December of 2018. So it was a year, from start to finish.
So let's just kind of talk about some of the deals that you invested in passively, because I'm sure there are perhaps some listeners out there that are considering this, but they're probably not really sure about how to go about vetting some of these deals. So what was your approach to that in your thought process?
So one, being a part of a mentorship group was fantastic because I met a lot of people that were in the group for 2, 3, 4 years and was able to leverage their experience. So asking them, hey, have you invested in any deals? Who'd you invest with? What's been what was your success with that sponsor? And so that was one way that I kind of developed who I wanted to invest with, was from talking to both other syndicators and also other passive investors who had already invested and had made good money on prior deals with these sponsors. Another way that I found some sponsors, so I invested in some deals that I met through the group, and I also invested in some deals with sponsors outside of the group. And I became introduced to them through similar to this, through listening to a podcast, and was impressed with their background, was impressed with their success to date. And then I reached out to them and then got on the phone and had a follow-up conversation. And with one of them, I actually went and met with them, and the other one wasn't in Texas, so I just had a phone call.
So after you got these introductions and you reached out to people, that had these leadership platforms, and so how did you go about, you as the LP, kind of looking at the passive investor? So from the LP, not the passive investor, the investment, from the LP's perspective, like kind of what were some of the key things that attracted you to some of these investments? Like, why did you pick this one over that one?
Right. Good question. So, the first step was determining who I wanted to do business with, right? The sponsor. And then the next step, to your point, is, okay, well, what about the deal specific? Why did I invest in each deal? And for me, I knew my long game was I wanted to syndicate deals myself and be a lead. So there were different factors that played into my mindset that may not be the mindset of every limited partner. So in this space, I'm sure you've seen this. I think it's kind of silly, but when people talk about their experience in the real estate world, everybody seems to say, "Oh, I'm an investor in 500 doors or 1,000 doors or 2,000 doors," and it makes their resume sound, I don't know, I guess sound better than it. So I saw that people were doing that, so I said to myself, okay, well, I'll just play along with that game, and I'll look for larger door, properties to invest in, so that when I put on my resume that I'm invested in, so now I'm invested in like 4,000 doors. I still think it's silly because you can invest, 50,000 or 100,000 into a 100-unit deal or into a, 500 unit deal. And it's still $100,000 investment, but the 500 unit deal may sound better on your resume. So that was one of the things that I did. Was the first few deals I invested in large transactions. So one deal was like 500 units. It was 2 properties. Another deal was like 8 properties, and it was like 1,000 units. And then I shifted, and I wanted to learn. So one deal I got involved in was, it really needed a lot of exterior work. And so I said to the sponsor, hey, I want to invest in this deal. But, my long game is to be a syndicator, and I don't have any experience with, hiring rehab companies and whatnot. And so I want to, if I invest with you, I want to get an understanding as to how you went about, determining who you were going to work with and how you got bids for the, for the exterior work, et cetera. And so they were like, no problem, Darin, we'll get you involved. And so I invested in that deal from that perspective. So I kind of had different thought processes for each deal I got involved in.
Okay. Now, another thing you had mentioned too was you basically said that you had transitioned from the LP side and over to the EP, like the GP, excuse me, the more active aspect of the business. Now, to actually take down your first deal as a GP, would you say that the LP investments that you had was that helpful for you in the eyes of the lender, or did you still have to find someone else to help you bring on like the experience portion?
Yeah, so I'll answer that in a couple ways. One is, do I see value in that? In becoming a syndicator, was there value in becoming a limited partner first? Okay, so I'll answer that question first. And that, I would say absolutely, because the first limited partner deal that I got involved in, it's so different than buying a ticker symbol stock. You don't just go onto a webpage and 100 shares and this and click and you're done. There's actual documentation that you have to sign. So there's a LLC agreement, there's a private placement memorandum, there's a subscription agreement, so there's a questionnaire. So, just getting familiar with all those documents, and, I read through every one of them, from, page 1 to the end. And I wanted to understand it because I wanted to understand it from my perspective as a limited partner, so that when I come out with a deal and I'm raising capital and then the limited partners have questions, many of those questions may be the same questions that I have. And so I know where to reference that in the private placement memorandum or in the LLC doc. So that was important to me. In addition, making that first investment, although I had the capital and, I invested in 7 deals, so I had the capital, but I have to tell you, doing that first one and, submitting the wire for 50 grand to go to somebody that, yeah, I received a lot of recommendations about these sponsors and all that, but like still, hitting send on $50,000, I was like, I hope I'm not getting ripped off here, so that fear of doing that first investment, is a hurdle. And I think it's a hurdle for a lot of people. So now the second one and the third one and the fourth one, those were so much easier because, I made the investment. I started to get the monthly updates from the sponsors each month. And then after, a certain period of time, I started to receive distributions, and that makes you even more confident. So, but there's a leap of faith in, doing it. I wouldn't go blind leap of faith. I did my homework in terms of getting recommendations from other people and talking to the sponsors myself and reading all the documents and all that. But there's still, a fear factor. So that was important. Then the other question you asked me was whether, it's required from the lender's perspective. I don't necessarily think so. In the Dallas-Fort Worth market, it's extremely competitive. I've talked to a lot of syndicators across the country, and they tell me it's the same thing in a lot of other markets as well. So what I tell people when people reach out to me on Instagram or whatnot, and I have these sidebar calls, is that I don't think, it may change, but right now, up to this date, I don't think you could win a large scale multifamily deal unless you partner with somebody that has experience. That's my personal opinion, is that, there's too many qualified people bidding on these deals that, there's like 15 offers on a deal, maybe 5 or 6 go into best and final, and then there's the top 3. Well, the broker and the seller then have a conversation. Hey, we've got these 3 that are really close together on price and terms. Who should I go with? And the broker is going to pick the buying group that, they're most confident is going to close. So if I was to try to get a deal myself without partnering with an experienced guy, that broker is going to kick me out of that top 3 every time, unless I overpay. Now, if I'm $200,000-$300,000 higher than everybody else, they might, take a chance on me. But if you don't want to overpay, you have to be partnered with an experienced guy. So if that's the case, I'm partnered with an experienced guy who already has a strong real estate track record, already has lending relationships, already has experience with Fannie and Freddie, then I don't necessarily think that me having a few passive deals or me being a key principal on a deal really gets us over the hump on the lender side. Now, if you're wanting to buy a 16 unit deal, a smaller deal, and you don't have the experience and you're not going to partner with anybody, well then, yeah, maybe having that limited partner experience is beneficial.
So throughout your experience in real estate investing so far, what would you say have been like kind of one of the biggest challenges that you've encountered?
There's different challenges. Having the right personnel is critical on the property. So having a great property management company is great, but it comes down to who are the people that are on your property. So when we took over the property, there was a property management company on the property, and there was a leasing manager, and she was great, and I wanted to keep her, so we did, and she was great, and the property was doing really great for 4 or 5 months, but her background was with a much larger property, so she kept wanting the bonuses and more money, and our property couldn't, we gave her up to a certain point, but then we just couldn't afford to keep raising the salary level, and so she ended up leaving. Well, the property management company then got a replacement, and that replacement wasn't as strong, and so we started to see the performance of the property go down. That person didn't work out, and they ended up getting a new person, and that person has been great. But that's a bumpy road. So it's almost like any business, right? I mean, it's your people are a critical component to the success of your business. So I would say that's a major one.
Mm-hmm. And yeah, I mean, just you mentioning that kind of really hit home as well, because it reminds me of actually the business that I had started in Beijing back in 2010. And when I think back, to why we were able to make it as far as we did and for 10 years and do all right, is because of the people, the stability. in the staff that we had, even though there was one part of the staff where we had high turnover, but then there was that one core group of people, and it was because of that core group. And this is really actually important, this point that you mentioned, because I mean, it could significantly impact your investment returns, especially if you don't
Absolutely.
have the right person. So, throughout this, like, what would you say would be um, like how can you keep and retain these types of people? Like, what types of suggestions would you have?
Um, well, I guess I'll talk about a few different things. One is the actual people. If you have somebody good, look, I look back on the situation with the first leasing manager. If we don't have the budget, to satisfy, I don't know that we can do anything, right? But if you have somebody that's, quality employee, it's no different than any business, right? They want to be appreciated, they want, so when they're doing well, let them know they're doing well, treat them with respect. They're doing a difficult job, and they're helping you grow your wealth, not only you but all of your investors. But another point I want to make on this is that, I mentioned, to win a deal, you really need to partner with, somebody that's experienced. And you also talked about, the impact on investor returns. So for me, partnering with an experienced partner has been critical. So I partnered with a guy out of Chicago. His name's Raj Gupta. I met him in Dallas, based on some networking events that we had within the group. And, I pretty much run the day to day, but he's been there, done that, and he's seen these issues, arise before. So I love his approach. When any major decision, I come up with what I want to do. I contact him, and most of the time he's like, Darin, run with it. Right. And every now and then he says, you may want to think about this. And I think he doesn't say, no, that's a rookie mistake, whatever. You may want to think about this. And I think about it, and I'm like, you know what? That's a smart thing. And so he just kind of guides the ship. He's kind of like my board of directors, right? So he kind of just guides the ship. And I think that's incredibly important, because that helps us maximize the returns for our investors. If I didn't partner with somebody that had that experience, I might go down the wrong path just a little bit, have a rookie mistake. Yeah, I would learn from it, but all my investors would be impacted based on their returns also. So I think it's, if you're getting into the large scale multifamily business, not only to win the deal and help you raise the money, for the deal, but also to help you manage the deal afterwards so that you're successful. I think it's a critical component.
Now, maybe this could be like the next part of my question could be a little bit too granular. So just let me know, if you think so. Because one of the thought processes or thoughts that I just had was, um, one of the things that I've seen, and in my own personal experience, when I think about myself, money is just like one factor, one motivating factor. But for me, it's really a lot of like personal growth. How much can I learn, from this experience, and how will it help me in the future? So do you find, and I mean, maybe this could be at the deal level or for your business in general as well. Um, do you utilize any type of like professional development programs and things, or has this ever crossed your mind?
It's definitely crossed my mind. I'm very big on mindset. I'm taking action, pushing past the fear. And, so, in terms of daily habits, the first thing I do is go in my office and read a book of the Bible, or a chapter of the Bible, and pray. But then I read a lot of, business books, and mindset books, and some of them are about real estate, some of them are not about real estate, but definitely personal growth. And that's something that's extremely exciting to me. Is I love the journey, better than kind of the destination. And so moving away from my other business into the real estate side, one of the things that's really exciting is all the profit of my other business flows down to myself and my family. Syndication business, though, on that 76 unit deal, we have 44 limited partners. So everything that, myself and my partner are doing to improve that property and improve the performance of the property, improve the valuation, we're not only improving our wealth, we're going to help 44 other people increase their wealth. And so I just turned 50 last week, and getting involved in this real estate side has really given me an extra energy and passion, because it's not all about me. It's about giving back and serving others. Yes, I'm going to benefit from it as well. But I love the fact that, when we refinance and pull out a bunch of equity, or when we sell the property, it's not just Darin Batchelder that's benefiting. It's myself, it's my partner, and it's all of our limited partners. And so when I think to the future, I'm like, I just want to, push to the next level, push to the next level, push to the next level. So that could mean doing bigger deals, bigger deals than portfolio deals. And then possibly real estate is so big. I mean, it could be possibly looking at other asset classes down the road. I don't know, but I'm extremely excited, because I didn't even know you could do this. I didn't understand that you could get into these private placement deals, pool your money with a bunch of other people, and buy these large assets. And I wish I had known this years and years and years ago. Nobody had introduced that concept to me. So when I think about how many people are unhappy that all of their IRA money and all of their 401k money and their after-tax investment money has to go in the stock market, they don't want it to go there, but they don't know another option. And so that's one of the big things in my mind, is just to get the word out, to let more people know that they can do this.
So what would be a key piece of advice you'd have for new people that are just now listening in?
It depends on their goals. So if your goal is to be a passive investor, or your goal is to be, to actually learn how to syndicate deals, there's, I have that question comes up to me every time I'm on a sidebar call, and I kind of couch it in two different facets. It depends on how much capital you have, right? So if you have enough capital, my advice is to join a mentorship group. It doesn't have to be the same group as I'm involved in. I've met a ton of great syndicators across the country, in other groups as well. I've met a ton of great people in the group that we're in. But there's a cost to play, right, to get involved in that group. But if you have the capital, by joining, you immediately get access to a lot of people that are already have done what you want to do. And, when I talk to people that are not in a group, surrounded by naysayers, they're surrounded by family and friends that, hey, that's for other people. You can't do that, and it's hard to be successful if you don't have some support around you. But once you get surrounded by like-minded people, you start looking, they did it, I could do this, so, and you start leveraging their experience. So that's one. But if you don't have the capital, right, to join a group, there's some people that I talk to that are young, they don't have the capital. Then I advise them, all right, download the app Meetup on your phone. Most people know that app, but some people don't. It's just an app called Meetup, MEETUP. And then in the search field, just put in apartment investing or multifamily, and then look for meetup groups in your local area, and then start going to those meetup groups. Now, even that action step is scary for people. Well, I'm going to go to this group. I don't know anybody, I don't know, I don't know if I know enough to go to the group. Well, the group is set up for people like you that have never done anything. You're going to go to the group. You're going to meet some other great people. They are not going to judge you that you don't have any investments. They are there to educate you. And, and there's syndicators there that want to meet you so that you might invest in one of their deals. So you go to these groups and you're going to get educated. You're going to meet other people in the industry, and you're going to also possibly meet other people that you might be able to invest with.
So what kind of a book recommendation would you have?
Tools of Titans is not a real estate book, but I absolutely loved that book. So it's by Tim Ferriss. It's a big hardcover book. I bought it and it sat on my desk for a long time. It was a little intimidating to start reading because it was a thick book and I didn't know if I was going to have the time to read it. But what it is, it's actually, Tim Ferriss has a podcast and it's not real estate focused. It's just, he talks to a bunch of different people, successful people in all different facets of life. And he summarizes his guest shows in like 2 or 3 pages. So I would get up in the morning, get my cup of coffee, and I would read 2 or 3 of these summaries, and it all of a sudden, introduces you to the mindset of all these, incredibly successful people and how they think and how they look at life. And so I would tell my wife, I can't wait till tomorrow morning. She'd be like, wow. Like, I can't wait to meet the next 3 people. So I was actually really disappointed when I finished the book. I would love to find another one. If somebody knows another book like that one, I would love to find one.
And how could our listeners get in touch with you?
Best way to reach out to me is on Instagram at Batchelder Darin. You can private message me there. I'm also on Facebook and LinkedIn, or you can send me an email at dbatchelder@tzkproperties.com.
Well, thank you, Darin, for joining us today. It was definitely a pleasure having you on.
Thanks, Dion. I appreciate it.